Good day, everyone. This is Cathy Seifert, Equity Analyst and Portfolio Manager at CFRA Research, and I'm here to talk to you about our model portfolio solutions, and specifically our top 10 model portfolio. CFRA model portfolios are designed to help you and your clients find investment ideas that produce acceptable levels of risk-adjusted excess returns. And these portfolios utilize our time-tested methodology, specifically our stock appreciation ranking system, or STARS methodology, that utilizes a 5-tier recommendation matrix for stocks that range from strong sell to strong buy. Our 15 stock and ETF model portfolios have proven performance with track records ranging from 9 to 23 years, and they utilize our analyst expertise both based on qualitative and quantitative ranking systems. Many of the CFRA portfolios have outperformed the market over the short and long term. We believe that we bring a number of competitive advantages to this process. First, as the largest independent research provider, CFRA employs a staff of more than 75 analysts spread across the globe in Europe, Asia, and North America, many of whom have regional and sector expertise. Most of our analysts hold advanced degrees, with many holding JDs, PhDs, as well as MBAs and CFAs. The other competitive advantage that we believe we bring to the investment process is our forensic research and analysis and our litigation research and analysis. For those of you who may have been long-time equity research clients, you may not be aware that under the CFRA umbrella, we now provide forensic and litigation research, and we've married that with our fundamental research and analysis in managing our model portfolios. So, as I mentioned, we currently have a suite of 15 stock and ETF model portfolios available. 5 of the portfolios are actively managed by the Portfolio Management Committee. And those include Focus Stock of the Week, Total Return, Small and Mid-Cap Growth, High Quality Capital Appreciation, and Top 10. I'm the Portfolio Manager for Top 10, a position I assumed a couple of years ago. Power Picks also is an actively managed and collaborative portfolio that utilizes the best ideas of the U.S. equity research team. 2 of our portfolios are based on our chief strategist, Sam Stovall's insights. So the CFRA Portfolio Management Committee is a 12-member team that utilizes both a top-down and bottoms-up investment process. The team members, of which there are 4 portfolio managers, and each portfolio is supported with a co-portfolio manager. The team members have an average of 17 years experience in investment management. Personally, I have more than 30 years of experience as an equity analyst. Our team regularly consults with our chief investment strategist, Sam Stovall, many of whom you are probably familiar with. And basically, we consult with Sam to get a sense of sector allocations for the portfolios. I'll explain that when I go into more detail about top 10. We also obviously review the economic outlook, which is provided to us by our economic consultants. And then each investment or each potential investment in the portfolio receives a forensic accounting review to ensure there are no red flags from an accounting perspective. All decisions on portfolio changes, additions, and deletions are made by a committee vote, with each member having 1 vote. CFRA consulting analysts or covering analysts are consulted for every investment recommendation, and the portfolio managers regularly collaborate with the covering analysts to come up with new investment ideas. Once these ideas bubble up, a proprietary 3-statement valuation model is built for each portfolio candidate. Within top 10, there are a couple of particulars that vary from portfolio to portfolio, and top 10 has a couple of characteristics. For example, a stock must be a 5-star, which is our highest investment recommendation to enter the portfolio. If the stock is downgraded to a 4-star, which is a buy recommendation, it may stay in the portfolio. Once it's downgraded to 3, we typically remove it from the portfolio. Top 10 takes a look at sector and sub-industry allocation. We then do our fundamental and forensic analysis, and typically 2 to 3 stocks are sent to the investment committee to vote on for addition or removal from the portfolio. So the top 10 portfolio has a number of characteristics that differentiate it from many of the other portfolios. And as its name implies, it's a highly concentrated portfolio. There are only 10 names in the portfolio. The fund was created December 31st, 2001, so it's been around for a while. It's an actively managed portfolio. Currently, there is definitely a large cap bias to the portfolio. The average market cap is nearly 138 billion. There is a little bit of a growth at a reasonable price bias to the portfolio. The PE, the average PE of the portfolio currently is 29.7%, while the dividend yield is slightly below the market at 1.44. We've tried to tone down the risk a little, and as a result, the beta of the portfolio is below that of the market, and the current beta of top 10 is 0.79. So the CFRA model portfolio's performance over a 3-year time span shows that most of the portfolios have outperformed the broader market. Top 10 has been hugging the index performance over the long term. I'll show you some changes we've made to the portfolio and outline some of our sector allocation bets that we've made that has improved the performance considerably over the last year and a half. So currently, top 10 is significantly overweighted in communication services. Consumer staples, we have a slight overweight. Healthcare and industrials were overweight, as well as materials and real estate. I caution, though, that the overweights are skewed by the fact that the portfolio is so concentrated. Conversely, currently, the portfolio has no energy, utility, or financial exposure, nor do we have any consumer discretionary exposure. As a result of some of the changes we've made recently, the performance of the portfolio has increased significantly, and I would also note is durable given the changes that have gone on in the market over the last year or so. For example, in 2019, the market, defined here as the equal weight S&P 500, was up a robust 28.43%. Top 10 significantly outperformed the market, rising 35.26%. Heading into 2020, we took a little more of a defensive stance with this highly concentrated portfolio, and we've been able to significantly outperform the market. And year to date through June 30th, top 10 declined 6.29%, while the market was down more than 11%. I hope this information was helpful to you, and I enjoyed speaking with you. For more information on this or any other of our portfolios, feel free to visit marketscopeadvisor.com at advisor.marketscope.com, or for more information, call 800-222-0502. Thank you.